Alright, so guys, in this video, we'll be talking about basic SMC concepts, which is demand and supply. We'll be looking at order blocks, and then we'll be looking at what we call inducement as well. So this, as you can see here, this is my pair, USD/JPY, that's the US dollars against the Japanese yen, and this is a 1 hour time frame. So we'll be looking at some key trends and things we can spot on this chart or in this time frame. Okay, sorry for my colors looking a bit off or different, but just take note, this the one looking somewhat ash represents bullish move or buyers, and then the black one represents the bearish move or sellers, which in your own case might be a red candle, while the ash one or the gray one might be a green candle. Okay, so first things first, while understanding market structure, or before you analyze or mark out your order blocks, and you need to understand the movement of the market, right? So going back to the daily time frame, let's use 1D, that's 1D. All right, so we need to understand how market is moving on the daily time frame. Okay, and as you can see here, the market is currently moving in an uptrend. Why did we say it's moving in an uptrend? Because of the presentations of series of this. We have higher highs, higher low. I think this can be categorized as a higher high, a higher low, another higher high, a higher low, and this higher high here, right? And then price came back down here and is going back up to create another higher high, assuming it does break through this high over here, assuming it does break through this high that I just marked here. But either way, it's already established that market is moving in an uptrend, and as always, you want to trade with the trend. And why we didn't say it's moving in a downtrend is because price has not successfully cleared through this last low that was printed. This particular low has not been cleared. All right, let me just mark it out here. This particular low has not been fully cleared. Okay, we need to see a valid break of structure from this particular side, which market has failed to do. You can see this was with a, I think this is a pin bar, they call it a pin bar. All right, so price tried to clear, tried to push back down, but then the pressure of the buyers came back up and then took the price back to the upside. All right, so price has not really showed any valid break of structure. Don't worry, we'll still go back to break of structures. Okay, so this is why we categorically said that price is going, or market is moving in an uptrend. So now we've done with analyzing the overall market structure. We want to move down to see key things we can use. So we've already understood the market is going in an uptrend, and like I rightly said, let me just delete all of these. You want to trade with the trend. So if market is moving in an uptrend, most likely you'd equally want to trade with that trend, except you want to counter trend, which is another thing entirely, but I'm not here to show you that today. Okay, so now you can move down to your lower time frame. I love to use the 4 hours time frame, okay, to do my major analysis. Sorry, I'm not a paid user yet, so okay, so you want to use your 4 hour time frame to understand the market structure. Now you can have a situation where on your higher time frame it's moving in an uptrend, right? Just like what we had the daily time frame giving us series of higher highs and higher lows, right? And then you can have another time frame. This is your daily time frame, and let me just write it out. Daily. Okay, the color. Sorry, let me change the color to black. Okay, so this is your daily time frame. This is your daily time frame giving you something like this, and then you have your 4 hour time frame, for instance, giving you something like this. Your 4 hour time frame is giving you the almost opposite of what your daily time frame is giving you. All right, your daily time frame is giving you an uptrend, right? That's the overall view, and then your 4 hour time frame is giving you something like this. Let me just label it 4 hours. And then your 4 hour time frame is giving you a downtrend or a downward move. Now, what this 4 hour is trying to do is it's trying to correct the move made by this daily time frame. All right, which is what we have somewhere. Let me just mark out the region, somewhere around here. Right, this particular 4 hours move is what you'll be having in your daily time frame as something like this. So this is just a correctional move made by the 4 hour time frame. Okay, but mind you, the overall direction is a bullish move, right? But the 4 hour time frame is giving you just a corrective move. Now you can trade the correction move. Like I said, this is called the counter trend. You can trade the correctional move, but as a starter, to have the best entries, to always trade with the trend. So you want to be looking for buy opportunities at this particular region. Okay, so just like what I was explaining here, I made this example because of what we have on our 4-hour time frame. Okay, so we already understood that the overall trend direction is going in an uptrend. As you can see, there was even on the 4-hour time frame was giving us series of this bullish upward move, which we have here like this. I think this can be categorized as one move. Right, all of these are little internal structural moves, right? Then this little downtrend here, and then it's currently going back up. Sorry, it's currently going back up. Let me just adjust this. And it's currently going back up. Okay, so this is what the 4-hour time frame is actually giving us. So if you zoom down to your lower time frame, you might have the same thing, just like what we stated here with the daily time frame and then the 4-hour time frame having this. You could even go down as low as your entry points time frame, probably 15 minutes or the 5 minutes, whichever one you use, or even the 1 hour, and then you might be having your trends going against each other. That's maybe your 4 hours is going bullish, right, alongside the overall daily trend, and then your 1 hour time frame might be going bearish, or your 15 minutes might be going bearish. So you need to look for your buy opportunities in those setups. All right, that's topic for another day. But like I said, I just want to show you the overall market structure, which we fully analyzed, right? And then show you order blocks, breaks of structures, and then what else was I supposed to show you? Okay, inducement levels, right? So this is just like a little nutshell to introduce you to SMC full time. Okay, so just like we said, this is our 4-hour time frame, and then we want to outline major order block regions. And for those of us that don't know what order blocks are key institutional regions. These are huge transactions that are being done by bigger players in the Forex market or crypto space or whatever assets you're trading. All right. Now you can see other blocks categorized as a single impulsive move, something like this, and always has inefficiencies left, which is fair value gaps, like this. All right. So this can be categorized as an inefficiency or an imbalance, FVG. Okay, it's an FVG. That's fair value gap. Right, and these are moves made by smart players in the financial markets. Okay, so let me show you another one. So this is a move here. This is a wide move, although this got counterplayed by this particular bullish candle here. I don't know if you can see this. This particular bullish candle here got counterplayed, right? So we won't really categorize this as an OB, as an order block region. Okay, but you can mark this out here as a fair value gap. I told you a fair value gap is literally inefficiency in the markets, right? And these inefficiencies need to be filled up by the same market. Okay, price cannot just keep going. If it's going an uptrend, price cannot just keep going up in one single move. All right, there's what we call the impulse. This is the impulsive move, then the corrective move, impulsive move, corrective move, impulsive move, corrective move. So this is how price or market would always move, right? It can't just move in one single move like this. No, it doesn't work that way, right? Even if it must have little pullbacks, and even if it does have those little pullbacks, there's going to be a point in time where there will be a reversal, and then price will have to come back to fill up all those inefficiencies. In order to gather momentum to be able to continue pushing price back up. Now, this momentum that the market is gathering is called liquidity. This is what we call liquidity in the financial market. This is what we call liquidity in the financial market. That's what price needs in order to move. All right, it needs to gather people's money. It needs to gather, losers' money from the financial market before it keeps moving its progressive upward movement. All right, it doesn't just keep moving in one direction. So this is basically it for this section. I said we're going to pinpoint some other blocks, fair value gaps, mark out our demand and supply zone. So we're still currently in the 4-hour time frame. What we have here currently is actually a demand zone here. I just marked. This is a demand zone, but this is for demand. So we still need to go down to a lower time frame in order to filter it out. Okay, this is most likely going to be a strong region for price to always come back and respect. All right. Okay, I think let's adjust our trend line for price to come back and respect. All right, before this particular move. So you can see that this was our demand. These are demand zone that we already had, and then price came back to okay. So as you can see, this is actually our demand zone here, which I rightly just marked out. Sorry, let me label it so that we can have it. Let me just mark it out. Demand, yeah. These are demand zone that we have right here. You can see price came in and tapped multiple times. Okay, let me zoom in so that you can see. Price came in and tapped. This was the first tap. I think this could have been due to news or something. Right, this was the first time price created this demand. The second time, and then third time, you could equally add this to the list. But well, so we're anticipating this. These are an institutional reference point that we're anticipating price to come back to, and then cause a move up, be shot back to the upside. All right, and then we have price tapping back into the same demand zone here, right, on the 5th of August, and then price pushed, or market pushed the price back up to the upside. All right, and then price came back up here, cleared the available liquidity here, clear the available liquidity. Don't worry, when we get to liquidity, you understand. So price cleared the available liquidity at this particular point before pulling back to the upside, and you see came back to retap on our demand zone here before still pulling back up and then creating this bullish wave or this bullish move. All right, so I already explained also fair value gap is, and then this is our demand zone currently that we have here. Let me just adjust this to be straight. Yeah, this is our demand zone. And then supply zones are always found to the upside. This is the first fair value gap we marked. If you can remember this particular one, I told you fair value gaps are inefficiencies in the market, mostly caused by big players coming in and having like bulk transactions in the financial market. All right, so in terms of marking out order blocks, let me zoom down to a 1 hour time frame so we can 1 hour, sorry. Let's zoom down to marking out our order blocks so that we could be able to spot on what other blocks are. I prefer using the 1 hour time frame to mark out my order blocks. There's just something about the 1 hour time frame that I love. So this here, all right, this here is an OB up here. This is an order block. I told you an order block is literally a huge transaction that's been made by players or huge players in the financial market. All right, most of these transactions are filled with imbalance or inefficiency. So I told you, I showed you what an imbalance is. All right, so this is an OB. Let's just label it OB 1 hour, and then you can see that price broke through this OB. Right, price cleared through this OB. This is what we call breaker blocks. I would come back to it. So this formed a breaker block, but a breaker block is something. Let's use the same bearish order block, and let me show you. So this is basically what a breaker block is. Then coming back and like this. So here, this particular point here, let's assume this was our order block. Let me mark it out. OB 1 hour. Let's assume this was our first order block. This particular point here, right? This particular point is our first order block, and then we're anticipating price to come back and respect the order block, but then somehow price decided to break through the order block region, which is like what we have here. So it's a breakout. Price broke through the order block, then it came back for a retest on the order block, which is this particular point, before shooting back up. So this is called the breaker block, and that's exactly what happened here. But anyways, back to the topic, marking out order blocks. This is still another topic for another day. So it's actually an order block here that we have here. All right, and gives us more confirmation because of the inefficiency. We have an inefficiency here from this particular region to this point here. This is the inefficiency in this market. So let me just change the colors. Let me use green for the interior. Yeah, so this is a fair value gap here that we have, and then price came in, tapped into the fair value gap a little bit, and then obviously I believe it's because of the demand zone, the strong demand zone that we have down here, that was able to repel price against this order block and push it to the upside. But thankfully it did form a breaker block structure for us. So if you know how to trade that, then voila, there you have it. So that's just basically it about the order blocks. Don't worry, we'll be dropping more videos subsequently about how you can trade order blocks professionally, and then how you can equally use fair value gaps to determine better and most profitable order blocks to take your trades with, as well as we're looking at stronger demand and supply zones. Okay, so this we just traded using the demand. So I told you this here is a liquidity. This is liquidity here. All right, price use this to clear traders out of the markets, grab their money before pulling back to the upside. This is a breaker block strategy that I rightly just marked out. Okay, and then you can see currently price is moving to the upside. And remember, the overall structure or the overall direction of price is in an uptrend, like this. What we have here. Sorry, what we have here. This is what the daily time frame was showing us. Right now, this is left for us to deduce when to take our trades from. Now, because we said the market is going in an uptrend, doesn't really mean you just come here and say, oh, because your overall direction is in an uptrend, then I'll take my buy from here. I'll take it all the way to the swing high, all the way to my let's say the daily time framed the daily time framed last printed high. All right, you take it there and then you say, oh, because it's in an uptrend, let me just set my stop loss here. No, it doesn't work that way. Okay, you need to find a good entry point. Now, our demand zone would have been a good entry point, but since you missed out on your entry or our entry now, what you need to do is look for another institutional reference point that price would obviously go back to. Remember this, I told you guys about fair value cap. This is a fair value cap, although price came back and tapped into the fair value cap too, but this is a fair value cap, right? And that's a fair value cap, so you can zoom down to your lower time frame to get a clean and a better entry point. Okay, so price has been creating a series of higher highs, and little or no higher lows, right? Without having a break of structure. Okay, there is literally no inducement to have cleared or added more liquidity to price to keep moving. There's literally no inducement that has been cleared. So you need to find a key institutional level, right? That price would have to go back to tap into. All right, this our third reversal point, possible reversal point, is giving us a clearer picture as for price to clear this liquidity here to add more momentum to its movements. All right, we still have an institutional point here. The price can come and clear and then tap into this mini OB, this particular one that we have right here. This particular one that we have, I'll tell you why this is more or less like a stronger zone for entry. All right, so in the concept of price action trading, all right, you have your dynamic support and resistance levels, which let me mark it out. So here could be this is actually a strong zone. All right, so this was a resistance level. All right, price came in and this formed this was a resistance level to price at this particular point. All right, you see price tapped into this particular level multiple times, and then it broke out and then came back down, tapped into it before causing this breakout. So price could literally use this as a point of interest. So we can just cover here, right, this whole level here as a particular point of interest for price to come back and tap into this mini looking OB that we have here. All right, before taking the price back up to the upside, thereby clearing lots of liquidity, because there are lots of people that have entered for trades to the buy side because market is currently moving in an uptrend. So price has to come back and clear them out of the market, take away their liquidity, hit their stop losses before pulling back up. All right, told you we have multiple places that price. If you're looking short term, then you can literally take these particular. How did I mark this here? If you're looking short-term trading, then you can literally mark out little inducement levels that's going down to your 15 minutes time frame or whatsoever to get your clean entry. All right, but since I personally would love to swing this trade, I'll wait for price to get to this my zone. Now, mind you, since we've already established that okay, we are currently anticipating price to come back to this zone, what we need to do now is to look for our shorts. So now we're trading against the trend. We will be counter trading. Now let's assume, for instance, we have our shorts from this particular level here. See stop loss here and then TP all the way down here. Let's say here. Let's say at the end of our fair value gap here or something. All right. You could literally take your shorts all the way down and then before you book your major buy. All right. But we need to see some key things in order to give us this clear short trade. All right. We need to see breaks of structures. We need to see breaks of structures here. We need to see a valid break of structure. Price needs to fully break structure. It has literally cleared out this inducement, which this can give. This is giving us a valid break of structure. So have a little pullback to the upside here, for instance, and then coming back down to break this same structure here that price has created. This particular one here, causing another break of structure. Right, and then want to see price keep doing the same settings continuously until it fully hits our. Mind you, can still come back or do something like this, right? But all we want to see is price hitting our full TP, right? They will reposition for a long-term buy. All right, so this is exactly what we want to see price doing from this particular time frame. So this is it about OB's fair value gaps. I only mentioned demand here because I don't want the video to be too lengthy. Then we'll talk about our supply zone in the next video. I wanted this video to be just 20 minutes so you could get excessive time to watch and then do your thing. So this is just basically it. All right, do make sure to hit the like and subscribe button, and it would help us if you share this video to somebody who finds it useful. And I'll catch you guys in the next one. Thank you.